G'day, Bruce Sawyer here. Just wanted to have a quick chat about what is happening with the coronavirus and the stock market and all the world events and the media. And I promise I won't get into toilet paper. But what I wanted to in particular talk about is this week. What I've had is quite a number of buyers and sellers wanting to talk to me about what this all means. You know, the stock market's a bit volatile. We've got all this coronavirus going on with borders being closed and bits and pieces and the impact of that. So there's a lot of, things that are happening in the marketplace and in the world that we're not used to seeing so much. And as a result, people are sort of asking questions as what's this going to do to the market? You know, is the market going to crash, or should I wait to buy or should I wait to sell? Putting it simply, typically when we have the stock market getting volatile, the interest rates are extremely low, potentially going to negative interest rates and unheard of record in coming months, but to stimulate the growth. What we get is people, what are you going to do? Put your money in the bank? No, that's not going to work for you. So you're going to get zero return on that. So as an investor, you're not going to look at the bank to put your money in. Stock market, yeah, there's money to be made in the stock market, and the financial advisor will tell you that there's a time and a place and the right strategies. But your mum and dad investors, they're going to stay well clear of the stock market. So too much risk for them. They're already panicking about their superannuation and the impacts that's had. So what happens is people look to your stable, the bricks and mortar, so property with the stability, the long-term growth. Let's just stabilize things, and they look for that to be the way to park their money, get a decent return, and with what they perceive as without risk. Now, naturally, there's always risk, and we can't guarantee anything, but history shows us that bricks and mortars always, over time, grows. The land values grow, the property grows. Now, add to that where we are on the Gold Coast, and we don't have enough supply for the demand that we currently have. So especially when we talk about southern states, the value on the Gold Coast is exceptional. So as an investor, there's a lot of places you're getting dollar per thousand, so around your 5.2% plus gross rental yield. That's not achievable in places like Sydney. So a lot of investors are coming up here still. There's still a lot of people selling up in Sydney and Melbourne and moving to the Gold Coast and relocating families. There's a lot of buyers in town. Now, don't get worried by and listen to the media. If you're thinking about selling, the time is when you're ready. Now, if you're concerned, talk to your agent and get some advice on what the market's doing in your particular area. But in general terms, we're pretty straightforward for the coming months. Now, we can't guarantee what's going to happen later in the year, and it depends on how all this media hype goes and how the market with stock markets and supply chain influences happen. But let's just stay calm for a little bit. If you're looking to buy, never been a cheaper time to buy a property. Where we got positive market, the banks are almost giving you money away. So if you're time to buy, get in now. If you're looking to sell, you got plenty of buyers looking. The properties are selling quick, and in some cases multiple offers. So really, it's a great time to sell as well. So you're going to get good results in either way. So my bet, don't worry about what the media is saying. Do what you feel is right for you, and trust your gut. Thanks, guys. Talk soon.